Hey guys, it's Simon with Trade and Perform Coaching, doing the trade review for Wednesday, the 1st of July. I want to go into the market preview, a little bit of what we covered in the market preview, and then see how that played out through the course of the day. Try to keep it relatively brief this evening. I realize that I say that all the time, and then I end up running on much further than I want to. So I'll try to cover all the important areas that I can. So first, let's see what we started off with at the beginning of the day. So we gapped up. Prior day's closes down here at essentially where Globex low was, 2054.50, and we gap up into 2073, 2074. That's a 20-point gap up. So you got to think when you're coming into the day and you're preparing. First of all, what is the biggest up day that ES is going to have in general, right? What you consider and go, okay, this is really very far extended. Well, 20 to 25 points is a pretty big extension on ES, and in the recent months, that's a huge extension or a huge up day. So the first assumption we have coming to the day is that the move has been stolen overnight. Why is that important? In order to get a move to make a significant extension up, you have to have the ability to have energy to fuel it, right? Look at it this way. Everyone who came in, the only people that you're going to be able to get to push higher here off the open are really people that carried short overnight, hoping that there'd be negative Greek news to push us lower, right? Because no one's really what's going to happen is anyone who bought down here at 2054, if you get an extension to 2074, go look at the recent extensions, right? So let me show you this. So you think like an institutional trader. Let's just get, okay, so if we change this time frame to 30 minutes, look at what we're having day over day, right? To give you a clue. Intraday 2120 to 2110, 2120, 2110. On this day, 21, let's just call this 2115 down to 2110. Again, on this day, let's call it roughly 2108, a low of 2092, roughly a 15-point extension. The only really outsized day that we've had here was this particular day where we gapped down. We went from 2080 down to 2050. That was 30 points. So think like an institutional trader is going to think. If an institutional trader was long, let's say he got long to close, or he was long anywhere down here at 2050, when he gets to 2070, he could go, well, we could go to 2080, but he's probably going to go, you know what, I've gotten two-thirds of the way there on a gap up. And additionally, kind of think of the mentality, right? We all have the same thought process, only institutional traders have thousands of contracts to get rid of versus smaller traders, individual traders have 1, 5, 10, maybe 20, right? But they're all thinking the same thing. Look, if I gapped from 2050 where I was last night to 2070, 2075, I've got 25 points. If I'm extremely lucky or something amazing happens, I've got 30. But most of those guys are not, most professional traders are not gamblers by nature, and they're not investors. They're not buying 2050 to get 2120. So if you come in and you were long from 2050 or even 2055 and you've got 2072, 2073, you've got to be able to sell when the selling is good, right? Next question is, we've had we have non-farm payrolls coming out tomorrow morning. Normally, in front of non-farm payrolls, we get balance because institutions are squaring, which leads us to early on suspect that we are going to have a balanced market, right? And then the last piece, look at the range in the first half hour versus the range of all these other days in the first half hour. This is a range from essentially, I believe we went from roughly 2068 to 2074, 6 points of range. Even within here, the range is larger, much larger range. We're back to ranges that look more similar to having small balance early in the morning. Recognizing what the range is based on the first half hour's trade is very, very important to adjusting your entries and your exits, right? So let's go over that again. We knew we had a big gap up. We knew that the move was likely stolen overnight. We knew that we were likely to have a balanced day. And then the last piece is when you have a balanced day, and what can I use as a drawing tool here? You know what? I know what I can use as a drawing tool. I think this will work. Let me try this really quick. There we go. So normally, when you know you have a balanced day, so if this is, and it doesn't work, let's see if I can do this here. I was trying to use my GoToMeeting tool. My drawing tool conflicts, I think. Let's kill this, it's conflicting. Let's try one more trick here, and if not, we'll just give up on it. Oh, there you go, that works, perfect, okay. So, balance day, right? In balance day, what do you have? So balance usually looks like some variation. You have three variations on balance. You can have balance like this, okay? And the general concept is when you get balance, pushes to new highs and pushes to new lows will get shoved back into the middle, right? You can see that we had an example of that here. We come up to a new high, push back into the middle. We come down to a new low, push back into the middle. For reference point, 626, perfect balance day. But there can be variations on balance. You can have balance that looks like this, right, with continuous pushes back to the middle of the channel. Right, so if this is the channel, every time we break below that channel, it'll shove back into the middle, even pushing lower, right? Or you can have balance with an upside move, right? Lastly, what's been the characteristic of the last couple of days? All these breaks at approximately 11 to 12 p.m., we have been getting breaks for multiple days in a row. 1, 2, 3, and today was the fourth. Where we're getting breaks right between 11 a.m. and 12 p.m. Central Time. So let's go through the characteristics that we had one more time so we keep this all square. Overnight move stolen. Contracted range in the first half hour of the day. Smaller rotations relative to the price action we've had the last couple of days. Non-farm payroll on the horizon. All of that adds up to we are probably going to have a balanced day, right? So then let's go look how the day played out. Hold on a second here. Okay, so first of all, NQ opens up. Notice the chop, very different from the last couple of days, right? Let me copy this screen and get rid of these channels. Okay, so we open up. We are getting mostly balance inside for the first hour, which is, as expected, range was stolen. You can see here the effect of balance taking place. Push to a new low, back up into the middle. Push to a new high, back in. Push to new low right here. Attempted move back to the middle. Again, push to new low here. Push back up. Extended move. New lows. Push back to the middle. New low again, and then finally push, and this time all the way back to the other side of the range. So again, most of these are aimed towards the people that are in the live market preview so that they can follow up with what we did in the morning with what's going on in the evening. So when we tie in addition to the new lows pushing back to the middle each time we're getting them, right? Additionally, we have range expansion. So from 2074 down to 2064 is a 10-point rotation. We get a beautiful rotation back up from that. And then finally from 2070, we get a rotation finally all the way down to 2060, 10-point rotation from swing high, and that results in a final exhaustion move at 1 o'clock. And then we squeeze right back up to the top of the range to give us an entire day where effectively the market went nowhere. Now, let me see if I can tie this all together. If you understand that you're having balance and that new lows are going to get pushed back in, that can give you the confidence to take those support levels and know that we're likely to get a rotation back up. It becomes then a question of balancing your entries, your stops, and your scales, which I talk about extensively in my one-on-one coaching. I'm not going to cover it here, right? But this shows you how you could take an entire picture from the beginning of the day, recognize that A, you were likely to get chop after watching the first half hour. B, that new lows were likely to get pushed back up and new highs were likely to get pushed down. And this generated something that was also very important. This 2070 right here is the area at which, if you look on the larger picture, this 2070 is the bottom of the old trading range. You can see it on the volume profile. Let's see if I can pull it up here really quick. Pull up another volume profile. Here we go. Okay, so you can see the old range. This is 2070, 2071, where you can see we closed right here, and you can see multiple times we push down into this area, push back up, push down to this area, push back up, push down to this area, push back up. So now we've traded below, and this is going to be one of two things. Either this is going to turn out to be a head fake, right? Shake everyone out, back up into the range, then back up to this 2120, right? 2110 to 2120 area. Or this is actually a break. This is a backside test of what was prior support, right? We're backside testing right into this little area because this before was that head fake breakdown. We snap back up. Now notice that we're snapping back up, right, but unable to close back into this little area. The key to this was that we were closing back above this little 2073 area to make a push back higher. I want to go over that again so everyone can see it clearly and understand. Before, we would break just below this 2073 area down into this upper 2060s, right? But then we would close back in, trap everybody, push back up to the top of the range. We did it 1, 2, 3 times, right? So now we've traded well below this 2063, 2073 area. So what's going on now? Now we're getting extensions back up into this area, and it's getting exhausted in this area and quite potentially setting this up for moves back below. What's it going to require to get a move back in? Well, we really want to close back above this little lip. If we can close just above 2075, 2080, that locks us in and gives us the potential to push higher. But as long as we stay below here, that opens the door for a push lower. Really quite straightforward, right? Also, if we look importantly at this, I'm going to erase this, and we take the 5060 retrace. Okay, you can see this is the 5060 right here. So there's two key areas. First of all, closing above this 2073, which we have not managed to do yet. We'll find out tomorrow with the non-farm payrolls. And then the next big test is this 5060 retrace area, right, for a pushback lower. So putting that all together today, what were the major trades that I called out? When we look, well, I didn't have the room recorded, but I can tell you. That's tomorrow's chart. I can tell you that. First of all, today I was short in this 2073, 2074 area. When we traded above, we trapped back inside at 2073. I was short, beautiful rotation back to the downside, right? Did not carry it all the way down through here, but I did get a nice short off in that area. Next major trade that I called out was this first time into this 2062 trade location. Gave us a rotation back up to 2065. Very nice trade. I had left for the afternoon. I told my daughter I was going to take her bowling, spend the day with her, and that's exactly what I did. So I was not around to capture that second test. But the theme that we had for the day played out throughout the day, which is each new low provided a trading opportunity to go back into the middle. But you had to have the ability to read that, hey, we were likely to have a balanced day for the day. And then the trick was to switch to realize that the balanced day was just going to be over a wider range because the ranges have expanded. Trading is hard because the boundaries and the parameters constantly expand and contract, and it throws people. The market's designed to throw people. Your job as a trader is to figure out and be acutely aware of when the range is expanding, when it's contracting, and then identify what type of day we're likely to have, both off of the first half hour's trading and off of your general map reading abilities, and then adjust your trades accordingly. Anyways, I hope that helped. My name is Simon. I thought today provided some really good trading opportunities, and anyone who would like to come into the room in the morning, you're welcome to have a 7-day free trial. Just simply email me at tradeandperform@gmail.com. And I hope everyone had a wonderful day. You can make money trading and day trading and swing trading for that matter, both of them. But you have to have a written trade plan. You have to have you have to be properly capitalized, and you have to be properly leveraged so that you can survive the learning curve, right? And then you have to be willing to discipline yourself and understand who you are as a trader in relation to the market. But once you get those keys down, you can do very, very well. And then lastly, I want to leave everyone with the 3 C's, the key to success in trading, which is, first of all, clarity. Clarity is understanding what your trade setup is and how you're going to take it. B, commitment, that you will take it and follow your rules. And then finally, your composure, that you will have a routine and handle yourself appropriately so you stay in a learning mode from every trade, both winners and losers, and you can adjust as you move forward. Anyways, everyone have a great night, and I look forward to doing more of these trade reviews. We'll see everyone bright and early tomorrow morning. Non-farm payrolls, remember, can be very, very volatile, potentially. So keep that in mind. Tomorrow you're playing with the big boys. Have a good night, guys. Talk to you later.